All right, let's talk. This is one of the most profitable trade setups that I can teach you. And usually we have a class where we have 5 or 6 professional traders come in to our offices, and we charge them anywhere from $75,000 to $10,000 for the week. And I was still surprised of the number of them by the time they got there that were still not doing this trade. There was only one that was actually doing it. This is one of the most profitable trades that is still working to this day that you can take home with you and start making money as soon as you get back home. Now, is it going to work for the rest of this year? I don't know. Is it going to work next week? I don't know. I just know it's working now and it's making money. It's the first thing, it's a gap trade on the index futures, Dow, S&P, NASDAQ, or Russell. I'm going to use the Dow as an example because I trade the Dow. First thing you want to know, is it a gap up or is it a gap down? You want to know what day of month it is, and you want to know what day of week it is. The reason you want to know the day of the month is because one of the days of the month, like the first day of the month and the last day of the month, are totally opposite on the close percentages. And then you want to know how big it is, and then you want to know what the color of the TTM is. All right. So how you set your trade setup is you want a 9:30 open and a 4:15 close. 9:30 open and a 4:15 close on the Dow. I use a 2-minute chart for this, and that's going to allow you to see when the gap is in effect. All right. So write these numbers down and post these on your monitor that you trade with. All right. Monday's gaps close 65% of the time. Tuesdays close 77% of the time. Wednesday close 79% of the time. Thursday 82% of the time. And then Friday closes 78% of the time. Now, how I have my lifestyle set up currently right now, I do not work on Mondays through Fridays. And by work, I don't mean I don't work. It's just I'm not physically responsible. I don't have to be at work if I don't want to be. I'm still looking at stuff, and I'm still doing work for either the trading company, the education company, and I'm probably trading a little bit too. It's just I've got it set up where Monday and Friday I always have off, as along with Saturday and Sunday, like I have a 4-day weekend. I don't know if I actually stick to it. A lot of times I'm just doing stuff that I want to do on those days. All right, so here are the percentages you need to write down. All right. You want to fade every gap that happens up until it gets above 60 or 70 points. And then after that, you want to leave it alone. Now, I almost always teach this way, but I trade it slightly different. And I'm going to tell you how I do it differently. All right. I will even trade the gaps that are above 60 or 70 points. Even though I teach people, like, don't do them. I still do them myself. It's not a case of do what I say, not what I do. It's I risk so small of amount on every gap fade that I do that I'm willing to go in every single one of them at least 3 times. Okay? So idealistically, don't do it if it's over 60 or 70 points. In real life theory, how I do it, I trade them all. Okay? But if you're my brother or my sister or my uncle or my cousin, I would tell you if it's over a 60 or 70 point gap, just leave it alone. Okay? So when we fade that, we're going to take the opposite direction. Now you can see there's a couple of anomalies here in the data, like 17 points fills 100% of the time, and 22 points fills 100% of the time. So obviously if you gap up 17 points, you want to do that every time, right? No, in the data it happened one time and it filled one time, so I'll throw that one out. 22 points, no, just leave it alone, all right? So anywhere from 1 point to 7 points on the S&P, or from 10 to 70 on the Dow, you want to fade that. I know it sounds simple, but it will make you money if you do it right. All right. Landmine days. Now, this slide's a little jacked up, but options expiration drops 2 percentage points from 78. Hey, what's up, Scott? How are you? 78 to 76%. Monday after options expiration drops 13% from 65 to 52. Okay. Rollover Thursday drops 7%. And now it's going to feel from 82% to 75. So you can see that there's places like Friday after rollover, it drops 15 percentage points. So you don't want to do that one, right? The first day of the month only feels 56% of the time, and the last session of the month only feels 85% of the time. The best trade that you can do on index futures is a half a gap fill. So if we know it's Thursday and we're gapped up 40 points, what are we going to do? This is the audience participation part of the seminar. So we're going to, all right, first off, it's Thursday, which we know from here. That's good, right? It's up 40 points. Okay, right? What are we going to do? we're going to short that, okay? And we're going to at least have a target of 20 points because that's half of the gap fill, okay? Now, how I do it is I risk either 10 or 20 points from the open as soon as it opens. And it depends on what the average true range on the previous day has done, okay? Either 10 or 20 points. And then I scale out of it every 10 or 20 points, okay? And I'm out of 3/4 of the trade by the time I get to half a gap fill. And the rest of the time, I just hold it until the close. Any questions on that trade set? Go ahead. Yeah, I don't have a copy of the slides. But do we have them somewhere, Henry? Yeah, you can get them through email. Email support at tradethemarkets.com. Tell them you're at the Vegas show. Yeah. All right, so that's how we do it. Question? I use a 10 or a 20-point stop loss. So on the S&P, it would be either 1 or 2 points, but on the Dow index, it's either 10 or 20 points. Right now, I'm currently using a 20-point stop. So in other words, as soon as I enter, 20-point stop loss. As soon as I have 10 points in the trade, my stop moves from -20 to -10. And then as soon as I have 20 points in the trade, I actually don't move the stop anymore. I just leave it there. I'm just looking for a running situation on the trade setup. All right. Now, one of our professional pit traders, his ultimate target is 40 points is what he goes for, and he just jumps out of it at 40 points. What I do is I hold it until the close. So that's one of the best trade setups I can give you. Half a gap fill is my favorite just because it happens a high percentage of the time.